All right, Sandeep, I'll start with you first. Markets were due for a fall. The selling has come. Could this accelerate further? Could this intensify further? Is it time to put money to work now?
I think it's too early to put money to work because of the fact that one, there could be global factors at play, and globally markets could correct, and that could lead to some sort of fall coming in India also. Second, if you look at economic data which has been coming out, started right from the core industrial data information, where core uh, output was actually down last month. Like some impact was there of heavy rains, etc., but still it was down. Then we've seen the pre-releases by many consumer companies, which don't seem to be very encouraging. So clearly, I think high food inflation, as well as slow growth in disposable income, lack of any fiscal incentives, etc., high taxation has started to have some impact on economic growth. Now, hopefully, the festival season sentiments, etc., will be positive, and we will see some revival coming through, and the RBI might also change its stance. So I think those things could happen and stabilize the economy. But right now, not only was the market heavy, but the economic data also is somewhat concerning in the near term. So I'm hopeful that the festival season will see good data points, but we need to watch out for that.
Where are we headed? Is this beginning of a long-term, a meaningful change of trend, or in hindsight, when we would discuss this lean patch, it would be a great buying opportunity?
I
Nuresh?
don't think.
Yeah.
Sandeep can
So
hear me,
if we,
Nuresh cannot hear me. See, Sandeep is prompting Nuresh now.
yeah. So
Nuresh,
if we look at it,
can you hear me?
see, yeah, I can hear you. So the current correction is more driven by the fact that Chinese markets have gone up 20-30% really quick. And this has happened after a really long time, the China-India performance shift. Now, this has led to a lot of selling happening on the heavyweights. So for the first two sessions, the mid caps and the small caps did not get hit much. But today is the day where the breath has also taken a hit. And that tells you that this flow could continue. The shift could be for some more sessions or for a month. It is difficult to say when it stops. So after the initial bounce back, today's recovery could not sustain. That indicates the selling pressure is still pretty high. So in this case, one would be better off waiting out and wait for a recovery and on the way up buy. So maybe buying 200 points after a recovery with a stop loss of 200 points would make a lot more sense now. So out here, selling, if it continues, we do not know where it stops. So this could be a good opportunity to slowly accumulate as an investor. And a lot of stocks in the heavyweights are taking a knock. So you have Reliance Industries today back to the prices where it was on June 4th, 5th. So there could be certain opportunities which would keep coming across the board. So it could be more stock specific given the outflows. You may get some stock specific opportunities going forward. So looking out for something like Reliance closer to 2750 to 2800 is a good entry price for the long term.
Right, okay. Kunal, what is your own sense? I mean, it's pretty much across the board of a selling, barring a few odd metal and other stocks like a Petronet, LNG, granules here and there. You think it's going to abate here, or is the selling going to worsen in the coming days?
See, I think there are a lot many data points to look at. Last 5-6 months, we've already seen 5% kind of corrections almost 4 or 5 times. For the indices. It started off from the month of, I think, March or April, when the mid cap correction first started off. Then the election results. Then during the budget, as well as the August sell-off. So I think in that context, we've seen 5% corrections quite a few times. Now the only change which we are seeing this time around is that the Nifties and the Bank Nifty, both of the indices, are coming very close to their respective 50-day moving averages. So in the previous instances of the indices going through a correction, we've managed to just about make a bottom closer to their 50-day moving averages respectively. So on a technical basis, we could be looking at the index forming a very similar kind of a base, say in the next couple of days, and assuming if we hold on to that 50-day moving average. But I think for that, we may have to wait out for one more or maybe a couple of trading sessions. The good part about the market so far in terms of the data point is that the put call ratio is at 0.5, 0.55, 0.6. And generally, we've seen the index forming a major bottom when the put call ratio falls below the 0.5 mark. So net, my sense is that in case if in the next 2 days, if we see maybe another 250, 300 points correction for the index, And if the data points start to become oversold, I think that could be a better point to try and go for a contrarian buy.
Sandeep, what pops up on your radar now? Assuming that we could be in for a 5 to 10% correction on the index, 3-4 has already happened, another 3-4-5 could come in. Mid caps will fall 10, 15, 20%. What pops up on your radar which you say, I will start buying on a 5% fall, add more at 10%, and I'll buy my complete quantity if it falls 15%?
Normally, I don't do such staggered things. So the view was that there could be a 5 to 10% correction. So we'll wait till possibly, let's say, hopefully it goes towards more near 10% from the top kind of correction. And at that level, there could be opportunities. So I think the first level of buying could be looked at on the large cap side. So I think, for example, Naresh was talking about Reliance. So I would agree that if Reliance falls under 5-7% from current levels, that could be a decent stock to buy for a 15-20% kind of upside over a year's time. Then some of the banks, like if the markets correct, typically banks have a higher beta. If they correct more than 10% from current level, then we could have an opportunity to look at those. L&T, if it falls near maybe 3,200, 3,300, then we could have a look at it. On the large cap side, I think these could be the opportunities.
Leg of decline, we've seen PSUs again getting completely clobbered. PFC, REC, HAL, BL, and these stocks were already weak. They were down 15, 20, 25%, and they're falling further. So can we decisively say that the party in PSUs is over and we are in for a bit of a dry patch there?
So in terms of PSUs, it's been very clear that say the ones which had rallied a lot, defense, railways, have taken a pause. Power may not be very similar. So if you look at NTPC Power Grid, they've been decent. They've not seen a large correction as such. So one thing is clear, the sectors which rallied very well from the PSU basket could continue to face selling pressure. So even when there is a bounce back, it may not sustain. So for example, if you look at a Cochin shipyard, which is down, one day it popped up 10%, we are back to the new lows. So out here, one is better off, say, avoiding the overrun spaces. Look at spaces which have been consolidating a lot where there could be an opportunity. So something like oil and gas is interesting. So even today, oil and gas looks the most promising sector. It could be the whole basket, whether it is ONGC, OMCs, or a Mahanagar Gas or an IGL. So I would say in the PSU basket, oil and gas looks the most interesting space with a medium-term outlook.
Oil and gas it is within PF.
All right, now what do we have? We have a 2% cut on the market. We have a market which is reeling under pressure. I like to bring one data point here, which is that Hong Kong has closed down and China is shut. So if you're thinking China's up 8%, that's 30th September's data. They'll open on Monday and then we'll see what happens there. So I don't know how much of the India selling is compulsive and how much is, largely because of China. Look, markets were heavy. They were extended. They were due for a fall. And, October is going to be different from September. September was about Fed. September was about drop in crude. October will be about what will happen to earning season, how the festival season demand would move, and what we are likely to hear from RBI. Those are more important factors which I think should be considered. Sandeep, let's assume that this China adjustment gets over in a couple of days. Then what comes back? Will it be rate sensitives? Will it be consumers? Will it be global facing sectors? What will come back the fastest?
I think rate sensitive can come back faster if there's a stance in the Monetary Policy Committee meeting, because I think the MPC is clearly falling behind the curve in terms of recognizing that the economy is actually slowing down because of tight liquidity. Like they've eased out liquidity a bit, but rates are still too high. And so I think that's one part of it. So that's where we'll have to look at. And secondly, we'll also need to track how the entire. So I think this festival season becomes very important because after 2 poor years of consumer demand, a lot of expectations are there that we will start seeing a revival now, and a lot of the marriage dates are also pushed back to the second half of this year. So I think those are the trends we need to watch out for. But the near-term economic data is concerning, especially in the light of the valuation at which markets are trading. So we need to see whether we go into an extended period of non-performance of the markets or the markets can bounce back.
Yes Bank is at 21. Where is Vodafone? Vodafone is at 9 rupees, 9.5 rupees. And Suzlon is locked down. So Kunal, this is the typical patronized retail club, right? Yes Bank, Vodafone
Suzlon
and Suzlon. We've been talking about it, that how they would be the first ones to fall when markets have to fall. Vodafone is down 50% from its high. Yes Bank was 20, 30, or how much was the high?
Yeah, I think Yes Bank was around 30, 32.
30 has become 22. And Suzlon was how much?
Suzlon, the recent high for the stock was around 85, 86.
85 has become 76. But Vodafone is where the crack has been the highest.
Yes.
Where are these three trading patronized stocks headed?
Well, it still looks very weak on the charts. So, what happened, Nikunj, was Vodafone Idea as well as Yes Bank, both of these stocks almost a month back, these stocks had broken below their long-term averages. And that was a very critical juncture for these stocks, because when stocks fall sharply below their longer-term averages after staying above those levels for months and quarters, that generally calls in for a reversal. And when that happens on the back of higher volumes, traders have to get a lot more cautious. And I think from those 11.5, 12.5 mark, for example, for Vodafone Idea, the stock has corrected another 20%, come down to 9.5 where it's trading right now. And even for Yes Bank, I think the 200 EMA has been broken much ago. So I think in that context, both of these stocks, they continue to look weak. Now there comes a point where these stocks become oversold on the charts. As of now, there is no data point which still suggests that these stocks are oversold, which means that these stocks may keep on falling over the near to medium term, and they may be not the first ones to try and get back into a recovery, but they may be the last ones as and when the mid caps and the small caps, they start to recover. The concern over here, or the third stock, which is Suzlon, that stock is now trying to break below its 50-day moving average. It's still way above its long-term moving averages, which means that the stock has a lot of cushion for itself. But nevertheless, with the sudden weakness in the mid caps and the small cap stocks, we could probably expect maybe another 5 to 10% correction for Suzlon.
Okay, that's that and some of these fancy trading names. But Sandeep, you think tactically at least it's the large caps which will win whenever the market does recover? Or would you say be stock specific and story specific? There is no harm in looking at mid and small caps either.
Yeah, there's no harm. I think this is a myth that one segment will not perform. It's a very stock specific market these days, and given the kind of liquidity which exists with the huge number of PMS, AIF players, etc. nowadays, so there is always interest in strongly performing mid-tier companies. I think we have to look at opportunities all across. At some points of time, large caps could offer more risk reward, and then so it's better to allocate to large caps at other times, and especially if there's some risk on the economy and economic growth. But if the monetary policy cycle clearly starts moving down, and typically in those periods, mid and small caps do tend to do well historically.
That's a possibility in the upcoming policy on October 9th, or will it be a little bit of a lag before we see rates easing?
So I think if they don't act now and if they keep the same stance, then we risk the markets actually selling off deeper than what the base case is. So let's hope that they do recognize, like now three new external numbers are coming in. I don't know how much time they have to absorb whatever discussions happened earlier and now. So it's important for the Monetary Policy Committee to realize that the things are not as hunky-dory as what they believe it is.
15834. That's the bank nifty for you. It has actually not been the collateral damage has not happened there. Couple of stocks which are worth revisiting. One is ITD cementation up 18%. Look at the volumes there. Somebody knows something is happening there. I don't know what. 20% higher in a market where otherwise stocks are just going here and there. The other odd one out is Angel Stockbroking. They were supposed to lose because of FNO volumes. Markets are saying, no, we knew this was coming. Sometimes you buy the rumor and you sell the news. In this case, everybody has sold the rumor and they are buying the news. And the other one is BSC. Today, BSC has traded volumes which are actually just a notch lower than Reliance. That makes it BSC the second most traded stock on National Stock Exchange. Angel Broking, again, right up there in terms of the total volume it has taken. Sandeep, the story is F&O volumes because of these new SEBI regulations should come down. Markets are saying that we bought that rumor, now we are buying the news. We sold that rumor, we are buying the news. Ulta ho gaya.
Because the reality of all of it is that, if uh, unless and until some restrictions actually come in a way where option trading becomes more difficult, we could see that continue. The only good thing which came out is that the weekly expiries will only be one per exchange. So that improves the speculative activity a bit. So I think these things will be watched on terms of volumes, whatever the way they track the losses, etc. And well, right now nothing has been done on the stock futures side, so we need to see whether something will come there also.
Have enough exposure to mid and small caps as well. You flagged off that if the decline were to continue, Sandeep, you will be, looking to buy even a Reliance and L&T. What within mid and small caps is looking interesting to you to buy on dips?
I think among the stocks which I track, so companies which are doing well include companies like maybe on the infra side, Ahluwalia contracts, which has fallen around 25%. So I think it's now actually in a range where I would like to be buying, but since the near-term view on the market itself is negative, so I would wait it out. Or something like an NCC, which has given up 15% from the top. Maybe if it gives up another 10-15%, it could come into decent buy zone. UPL as a contrarian play, it's decent to me because I think things are turning around in the global agrochemical cycle. So there, but I would like to watch out for this quarter results also to form up the view.
All right, Sandeep. Thank you for sharing those ideas. We'll flash them as well in terms of stocks which are on Sandeep's radar. Ahluwalia, NCC, UPL. These are three stocks, right, Sandeep? Ahluwalia, NCC, UPL, everything on decline, right? Have I missed anything?
Yes.
Okay. There was a fourth one also. Did I miss it or you didn't say it?
No, I didn't say it. You.
Okay. I'm assuming that there's a fourth one. Taking my chances if there is anything left. All right, now LIC is not taking chances when it comes to moving into the healthcare business. Now they've gone on record with their numbers and they've stated that look, we are interested in buying or interested in foraying in healthcare. LIC is not in healthcare and many may not realize that LIC only sells life insurance. Now LIC is looking at buying less than 50% stake in a healthcare insurance firm. Which ones would it be controlling? Would it be non-controlling? For all that and much more, let's go to my colleague Anurag Shah.
So in August, after quarterly result, LIC has said that they are looking to acquire a standalone health insurance company and they are actively working on it. But what we are picking up from LIC sources that LIC will not buy more than 50%. LIC is looking to buy less than 50% stake in a standalone health insurance company, and their actuarial team is working on it, and LIC intend to close the deal in this financial year only. So as per our sources, LIC wish to have not a controlling stake but a say in the board where they can influence the decision but not the controlling state in the new company they are willing to buy. Another development which is happening in the insurance space is the composite license, where government is planning to bring an Insurance Act amendment. So as per our LIC sources, that LIC will not apply for the composite license also, and to venture into the health insurance space, they don't need separate license also, and they are willing to buy a stake in a presently available health insurance company. So presently there are 7 standalone health insurance companies. Out of 7, 2 insurance companies started in the year 2024 only. The Narayana Health and the Galaxy Health Insurance Company got the license in 2024. So LIC will buy less than 50% stake in these from these 7 insurance companies, and their actuarial team is working very fast, and and they intend to complete the deal in this financial year only. As the health insurance space is the rapidly growing space, is the biggest segment in the non-life insurance sector. Around the 40% of the overall business in the non-life insurance space comes from the health insurance space, and LIC want to invest in a standalone health insurance company to buy a stake less than 50%.
All right, Anurag, thank you very much. Before we take a break, I just want to mark a trend here, and these are not the stocks which should do well when markets are so weak. JP Power, 5% higher. Ratan India Power, 5% higher. Reliance Power, 5% higher. Hello?
Call it the tail wagging the dog.
But the dog has to run. The dog itself is right now, slowing down. Why the tail wagging?
No, and this is not the first day where we're seeing the stocks. In fact, I've
when on a day when everything is down, the weakest stocks which you normally associate with trade and perhaps speculation, they are the ones which are going up on a day like this. The dog has stopped walking and the tail is still wagging.
This is the prime example of pure speculative behavior, speculative intent of the markets. And I think that's where the last 3-5 days, we've seen these stocks hitting upper circuits. I think Reliance Power, of course, over the last, 10 odd days, the stock has consistently, hit upper circuit from 30-35 to 50 plus levels where the stock is trading right now. So I'm not sure, I don't track these stocks on a regular basis, but just looking at the trend over the last 3 days, it seems like more of a speculative intent.
All right, let's take a break. Half an hour of market left. No recovery inside whatsoever. Europe is down but not out, but it is Reliance which is really acting like a sledgehammer in the market today, which is really puncturing the Nifty momentum. Down 4% now. Kunal, maybe you want to look at when was Reliance down 4% last. I think must be the budget day or something. But today it's down 4% and that's a nasty fall for Reliance.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.